This is Danny Gould with the Gould team selling Silicon Valley. Welcome everyone to another Silicon Valley market snapshot for the third week in August of 2019. So much to discuss today, so let's get right into it. Let's talk about the elephant in the room. Let's talk about this Housing Bubble 2 article that I just read. Just came out a few days ago, and this article proclaims that a theoretical doomsday is about to come onto the Silicon Valley marketplace. Who knows when? Again, they don't predict when. They state the facts, which is that median prices are down year over year, and they're down even more so from their highest peak, which is somewhere in like that spring 2018. So it looks like the median house. Let's pull up the article here real quick, actually. So we have this article right here, talks San Francisco, then they go into Santa Clara County, and from the peak, median prices are down 10.8%, and then from a year ago in July, 3.9%. Should this concern you? Well, you should definitely pay attention. One thing to keep in mind is that median is not necessarily indicative of prices falling. What it could simply mean is that less homes in the higher echelon of price ranges are selling. And this is something that if you've been watching these videos for any period of time, you'll know is the case. The higher end has struggled, and so in Santa Clara County, what you'll see is that the median price has fallen. That doesn't necessarily mean that prices are falling in every single category of home. That meat and potatoes, that $800 to $1.3 million home is still selling, flying off the shelf. It's everything on the ends that are kind of taking a hit, especially when we look at the condo and townhome sector. But let's not forget that this is something that I was talking about months ago. And it's really easy to get caught up in the whirlwind of the emotion that the media tries to instill. And what I would caution you is that if you're reading this news, I would caution you to think twice before actually taking it as truth. Nothing that they're stating here is factually wrong, but their headline is a little misleading. And my fear is that there's a lot of people just reading the headline and not looking at the meat and potatoes. Because truthfully, if you've been watching my videos for any period of time, you'll know I was talking about this in the springtime when I was saying that the median prices are going down, and that's because homes in the high end are not selling. And so what does that do to the median home price? It brings it down, because when there's less homes in the high end, less $3, $4, $5, $6+ million properties being sold, that naturally tends to bring the median down. And so before we start equating median price dropping to home prices dropping, think twice. Let's look at the data. So what I have here, everyone, of the Santa Clara County statistics for this week. Again, I've just decided to revert back to this camera. I think it just shows better this way, and you're able to digest it still because I have all the screens in front of me, and one day, I promise, one day we will have a studio setup, but just not today. So 1388 pen actives, which if you compare it to last year, we're up in the single family sector. So what does that mean? Last year we were talking about how great the market was and how amazing it was. And here we are, we do have a little bit more inventory, but guess what? We also have more pendings. 922 to 879. And so remember, July, August of last year is when things really started coming to a halt. And so that's definitely something that you want to keep in mind, because yes, we do have more pendings than we did last year, but the market was starting to soften at that point. Still a great market to sell in, and we'll get into why that is in a second, but just keep that in mind. Condos and townhomes, again, nothing new here. We're riding this steady, don't pay attention to this number, we're riding this steady wave of like 650 to 750 condos and townhomes active, and somewhere between 325 to 400-ish in the pending column. And if you notice, we're right in that last year as well. So the absorption not the absorption, that's the wrong word, but the appetite, if you will, is roughly the same. The difference is that there was way less to choose from last year than there was this year. And so what happens is that does slow the market down. You have to understand, when there's more to choose from, things take longer to sell. That doesn't mean that records still can't be set, although we're seeing less and less and less of that. But what you're seeing is a more stable market. This is predictable. Everything up here is predictable. There is no unpredictability in this. And so I think what you guys need to understand is that the media has thrown in this really wrench into the equation where they're trying to paint the market as this kind of like volatile type, unpredictable thing. And sure, at the beginning of the year, it was a little volatile, it was a little unpredictable, but if you've been watching these videos for any given period of time, like it's been the same message now for like the last 4 or 5 months. It's the same old good old Silicon Valley marketplace, and it's really predictable. It absolutely is. And it's been neutral, about 25% more inventory overall for the last quarter. Think about that. For the last 3 consecutive months, we've been 25% over last year's inventory. That's fairly predictable. It's fairly steady. It's consistent. Pendings are in that same line. The cool thing though, like if you're a home seller, is that pendings are actually trending up, which is good. That means that buyers are coming back into the marketplace. And so that headline about, despite new Silicon Valley millionaires and low interest rates, market is still slowing. Yeah, but you haven't really given the interest rates enough time to like kick in. And these IPOs, they just happened. Like, things take time. And that's the one thing that I think people just don't get. It's like, when they talk about these IPOs and these millionaires, it's like, oh my God, all that money's coming into the market overnight. That's not how it works. That's not how it works. These things take time to matriculate. Not everyone's going to exercise their options all at once. Not everyone's going to decide that they want to, people are in different phases of their life. Like, this is life. We're talking about real life scenarios here. It's really easy to get caught up in the norm, right? Like, oh, what generally tends to happen is people exercise their stocks and go and buy houses. Yes, but these things take time. Do I think it's going to happen sooner rather than later? Yes, I think this fall and spring are going to be amazing if you're a Silicon Valley home seller. There is, as the article pointed out, a lot of new money and artificial money from the government, if you will, if you want to call lower interest rates like they're artificially speeding the market up. With all of these new sources, if you will, of income coming into the marketplace, I do believe that this is going to be a great time for home sellers, especially since. I hope this doesn't happen, but I've seen a couple buyers recently pull out of the market because they're getting scared. And I think when everyone goes left, you got to go right. Like, everyone's saying like, oh, there's going to be a recession, like, oh, this, oh, that. And it's just like, yeah, but in the last 5 recessions, 3 out of the last 5, there's been growth in the housing market nationally. Think about that. In 3 out of the last 5 recessions, while the market did this, the housing market did this. Only in 2008 did we have a huge hit to the housing prices, and that's because the economic recession was due to the housing crisis. Like, there was a housing crisis that caused the economic crisis. That's not going to happen this time around. It's just not. If you look at the top economists, they list the top 10 reasons why the market's going to fail this time. Number 1, trade war. Number 2, stock market crash. Number 9, housing crisis. So it's not even on the radar. It's just not even on the radar, everyone. So when you're like, okay, well, what should I do with my cash? Well, let's talk about options. And if you want me to make a separate video on this, I really should. if you're like feeling kind of iffy about the stock market right now, if you're feeling kind of like, I don't know what's going to happen, let's talk about your principal balance, and then let's talk about the growth, right? Let's say that you have $500,000 worth of stock. Let's say that you bought it at $200,000 and it's grown to $500,000. You won. You've made a lot of money. You also have a lot of capital gains. So if you just pull it out, you're going to have to pay Uncle Sam a hefty amount. Why don't you sell off all the stock? Take $300,000, put it into an opportunity zone fund, which will be tax-free. You liquidate in 10 years. All the gain, everything is tax-free. And you take the $200,000, you put it into a single-family home here in San Jose, where you can very comfortably suspect that the home will double in value in like the next 15 years. Like, it makes a lot of sense to me, especially if you buy around Google. I have a lot of ideas around all of that I just talked about, but I'm really digressing from the data, so pardon me. But I think it's just so imperative that you understand this. If you are in the Silicon Valley marketplace, do not feed in to the media. They are paid to sell newspapers. They are paid to sell. Advertisers pay them so that people click. So what's going to get you to click? Crises, doomsday, apocalypse. It's just no. There is nothing apocalyptic about what we're seeing here, ladies and gentlemen. There is zero apocalyptic. There's zero apocalyptic undertones in this data right now. And let's go through the rest of the data just so that you see what's going on. Because, I mean, first of all, yes, there is an increase in inventory. We've gone over this before in Santa Clara County, about a 25% overall increase in units for the last 3 consecutive months. Now, obviously, there are areas that are in the red, and if you're a seller in one of these areas and you're like on the fence about selling, what do you think you should be doing right now? You should be putting your home on the market yesterday, because there is less competition right now, year over year. Now, okay, this is year over year statistics, right? So it doesn't necessarily measure like with 100% certainty, because this could be negative 39%, but the units last year were like plus 300, right? So you can't use these heat maps as an absolute, but it can definitely guide you in the right direction. Like if you're in Sunnyvale and you're thinking about selling right now, maybe you should do a little bit more digging. Now, granted, the next slide I'm about to show you might tell you something different. Now, we're gonna go to pending listings. Now see, half these areas are in the red. Now, what I wanna point out is that some of the areas that were in the black last week, or 2 weeks ago, whenever the last time we did this, which was 2 weeks ago, are now in the red. But there are many places in the black as well. The thing to keep in mind here is that none of these numbers in either direction are large, like plus 15%, plus 5%, negative 17%, negative 10%. Like these aren't monumental shifts, because when you look at when you talk about units, okay, like in Sunnyvale, there might be like maybe 30, 40 units. So negative 10%, it just means that there's like 3 less homes or 3 less pendings than there were at this time last year. So there's definitely trends that we should be observing here, but at the same time, don't let these numbers what am I trying to say here? My goodness. Don't allow the heat maps to define your perception of the market, because there's more data to dig into. So all this is the preview, but what you really need to do is, if you're thinking about making a buying or selling decision, is talk to me one-on-one so that we can have a more in-depth discussion, as opposed to just talking about generalities, because these generalities are not always the absolute truth. to have the absolute truth, we need to really dig into the numbers. Just one more piece of information I wanted to share with all of you is the absorption rate here in Santa Clara County, especially in the southern part of Santa Clara County. Now, keep in mind, ladies and gentlemen, that anything above a 33% absorption rate is considered a seller's market. For a few years, we were accustomed to like triple-digit absorption rates. We've normalized now to being, you know, all double digits. But there is not a single area in which we're even approaching a neutral market. The closest would be Los Gatos, and that's at 46%. So there's still plenty of bandwidth here before we even approach what economists, analysts, or statisticians would even come close to, like saying it's a buyer's market or it's a neutral market. Now, does it feel like a neutral market right now? Yes. But again, it's one of those things where we tend to have short-term memory, and the short-term memory would essentially lead us to believe that we're in a neutral market. When we look at the data and we look at the numbers and we compare ourselves to other places in the country, we are leaps and bounds ahead of many, many markets here in the Bay Area. I had the pleasure of attending a conference last week where I met agents from all over the country and all over the world, mind you. And when we talk about our numbers compared to their numbers in terms of units and or units per capita, right, and days on market and all those things, like, our numbers are still staggeringly superior to most other areas in the country. So, yes, the market has slowed. Yes, it has taken on a bit of a neutral feeling. However, if we're looking at this from a macro global economic viewpoint, we're still golden. We're still amazing. And I don't even know how to, you know, I don't even know how to really quantify to you in words how totally fine this is. But the only way that the Mercury News is going to sell their next newspaper is by telling you differently. So don't believe, you know, do me a favor. Do your entire family a favor. Do your net worth a favor. Turn off the news. Turn off the news. Just unplug it. Delete it until after the elections next year. Because that's how long the media is going to use propaganda to try and sway your opinions either way. There is no right or wrong. You know, I'm not making any sort of political statement here, but I'm saying that things tend to get a little wonky around election time, and we're approaching that, you know, wonky period. So do yourself a favor, do your portfolio a favor, do your net worth a favor, unplug that media, unplug that news source, unplug that television, and just watch SSV TV, because you get the freshest data here, everyone. This is Danny Gould with the Gould team. Leave any comments, questions, anything down